let's talk a little bit about how to trade price action. Now, I'm not going to go into some crazy in-depth from beginning if you're an absolute beginner, how to go about reading the charts, but really what I'm going to cover is some of the topics you see on the screen, just my opinion of what that really means. And then when it comes to price action, I really try to focus on that. And what that helps me with is eliminating a bias. Because if you come into the market with a bias, it's hard to see the other side. So I really just let price action tell the story. And what that allows me to do is react, not predict. Because it's really hard to predict what the market's going to do, especially in these times right now where there's a lot of noise and a lot of news and stuff that's coming out and hitting the tape. So I'm a big fan of reacting instead of trying to predict. And the really good thing about all those things that I just mentioned is that it requires less thinking. So when you're trying to predict and you're really trying to figure out the market, even though nobody knows what's going to happen, sometimes you can start to overthink everything. And then a lot of times when that overthinking gets applied to your trading, it's really hard to execute well. So those are some of the benefits of just focusing on price action and how I go about trying to trade it. Now, when we're talking about price action, I'm really just focusing on the candlesticks. I'm not obsessing with level 2, time and sales, just really looking at the aggression of the candlesticks, the formations of them. I talk a lot of times on my videos about the patterns that I like to trade, opening range break to the upside and the downside, and bull flags and bear flags. So really just reacting to the movement of those candles and then the technical patterns that I like to trade. And the reason that I have been able to figure that out is because I have been trading for 6 years. So it's a ton of trial and error to have found out what works best for myself. And these things are all great to talk about, but I'm a visual learner. So then the next thing I'm going to do is go over an example on Tesla. Let's take a look at Tesla. So as far as the daily chart, it's been really beat up. It's sold off a lot. The overall market is pretty weak. It's under the 9 EMA, an indicator that I like to use for short-term direction. And today was the CPI data that got released that was a little bit better than expected, and the market ripped. So if you look at the pre-market action, Tesla was trending to the upside. So it's very easy to look at this and think, we have to go higher, but the stock market doesn't have to do anything. That's why I'm a big fan of focusing on the candlesticks, letting them form, waiting for the patterns that I always talk about, and then reacting to that. Because if I came in with a bias that things had to go to the upside or Tesla had to go higher, it sold off pretty aggressively off the open. And most likely there were a lot of losses to be had if anybody was trying to buy that dip too soon. It's not easy to do, but I really try not to have a bias coming into the market each day. I used to do that all the time, and then I would always get it wrong. So I just wait till the open, and then I want to see the formation of the candles to make a decision. To me, that's the definition of price action. Just really looking at those candles and then trying to make decisions based on what's happening very short term. Now, these are 2-minute candles. This is my favorite time frame to trade around. I used to look at the 1 minute a lot, but the 1 minute can be very crazy. And I found myself over trading a lot when I had the 1 minute up. It felt like I needed to trade every single tick. The 2 minute I like because it slows things down just enough. And when the pattern looks good on the 2, I feel like it works really well. Now let's really break down what happened off the open and try to identify the price action and then look at the other side, where people could possibly be stuck, just trying to read into that and then using some of the indicators that I like to use to be able to make a decision on what to do. I'm a big fan of the 9 EMA and the VWAP. The 9 EMA is this orange line and the VWAP is going to be the green. So what happened off the open? A very big red candle that closed weak. So immediately I'm thinking, hey, just for the very short term, sellers took control off the open. This is where I feel like a lot of people get into trouble. Something is up, the moment it pulls back, they feel the need to buy it, simply just because they believe it's going to go up, especially if it's been trending higher in the pre-market, they're forming that early bias. So instead of jumping in, what I try to do is wait for a pattern and think, okay, what is the other side thinking? So if we pull back off the open, there's probably going to be people that are buying the dip. Maybe they're buying around VWAP. They think that it's going to eventually move higher. And then here's how I think about the indicators. Okay, we sold off aggressively. We are weak. We're below the 9 EMA and below the VWAP. This is why I'm not a fan of trying to buy stocks that are under VWAP or short stocks that are above them, because a lot of times they continue in that direction, and especially off the open where it's very volatile. So this is how I'm trying to see it. Big move lower off the open. If anybody is buying the dip, it tried to move higher and it failed. So it failed at that VWAP, showing that at least for the very short term, the direction feels like it's going to be to the downside because it had a chance to bounce and it failed. And it's not easy to do, but I am processing all of this information real time. The reason why I'm better at it now is because I've been doing it for 6 years. So then I think about the opposite side. If there are people that bought the dip and it is failing to get above VWAP, right here, this green candle, this is kind of the only sign of buyers that maybe there was a chance for this to reverse and it could not get above the VWAP, and it's well below the 9 EMA. And then what happens? It actually forms tight price consolidation. What pattern is that? I talk about this pattern all the time. That is a bear flag. So you got to think about everybody who is in this trade to the long side that got in just a little too early because they were trying to anticipate instead of being patient and waiting for a setup to look a little bit better. So I'm reading the price action, but I'm also trying to figure out where the other side may be stuck and then where they would want to get out of the way, because I think about, if I'm in the trade, where would I want to stop out? So trying to put it all together. A lot of people probably formed a bias to the upside off the open. What happened off the open? There was a big move to the downside. I'm not going to buy that dip because I like to wait for patterns. If anybody did, they got in a little early. It's below the indicators that I like to use, the 9 EMA and the VWAP. So the candles are below them. The price action is below those indicators. They don't work 100% of the time, but it just gives me an idea of what something could possibly do. There was one green candle that looked like buyers had some life, failed under VWAP, forms the technical pattern, and then breaks the low, and look at the follow through to the downside. And even just to keep things very simple, look at these colors based on buyers and sellers. So which color is winning for the short term? There's a lot more red than there was green. A little bit of green came to life, and then sellers, or the red, immediately took that out. So especially off the open, I'm almost looking at it kind of like a game. Is there more green? Is there more red? I obviously try to trade around a lot of the technical levels, but if a pattern looks good, I'll give it a chance. So when it comes to this specific setup, just off the open, the price action was telling me that the sellers are winning the battle. And you also look at the daily chart. Who's been winning the battle? The sellers have, because it's been very weak and it made a 52-week low. So the path of least resistance seems to be to the downside. Now, of course, bounces can happen, but if you just look at this, it's not looking good. So anytime that I see a lot of red or sellers, I'm going to think that they have a chance of winning the battle just because they have been for a while when it comes to the daily chart, the bigger picture trend. So this is a really good example of why I try to react, not predict. Because if I was predicting that Tesla was going to go up, this sold off pretty aggressively. And whenever it's trying to buy a dip and time that, I'm never good at doing that. I really like to go with the flow of the trend or with the flow of the current price action, and then try to go with the overall direction of the daily chart, and then match that with technical patterns and the technical levels that I like to trade around. So when it came to reading the price action off the open today with Tesla, you had sellers that won the short-term battle off the open, consolidated under VWAP, so using some of those indicators to get an idea of what this could possibly do. Buyers had a little bit of life right here, very small green candle, and then immediately got taken out after getting nice and tight, consolidating, and formed a bear flag, and then broke the low of that bear flag, and then had some follow through to the downside because the path of least resistance lately has been lower. So there is a lot that's going on, and I know that's a ton of information to process, but I'm able to do this quickly because I've been doing this for so many years. The more experience you have, the better you'll get. I feel like the secret to becoming a good price action trader really is just experience. You have to be in front of the screens for years to get an understanding of what's going on. So that was the video. I appreciate you watching. Feel free to like and subscribe, and I'll see you in the next one. Thanks for sticking around to the end of the video. I just want to talk about a couple cool things that I have to offer. The first is going to be my newsletter watch list. This is exactly what I post on my private Twitter 30 minutes before market open every single day. I do a quick analysis of the overall market, the SPY and the Qs, if there's any major market news that day, and then all the stocks I'm interested in watching. It's usually 4 or 5, if there's any major news tied to them, and all the levels that I think are in play. To the left, this is exactly what I'm posting on my private Twitter. I make sure to add that newsletter. I take a screenshot of the charts, green line to the upside being long, red line to the downside being short, and I make sure to highlight those 2 levels above. This is everything that's going on in my mind and my game plan going into each market open. Also, I make sure to add a little mental note because every day is slightly different, and here's an example of that. And if you want something that's a little bit less of a commitment, I do offer a live one-on-one call for 1 hour. This is where you can ask me questions about my journey, go over setups specifically, everything that I've gone through as a trader. Whether you're beginner or advanced, this is a great way to connect with me. So if you're interested in my private Twitter or the one-on-one live call, feel free to go to callmattdiamond.com or check out the links in the description below.